Hey Future Millionaires, this is Phil from the Next Chapter team, and welcome to another ETF review. Today's ETF review is going to focus on 4 WisdomTree Fund ETFs. This review, we'll do a deep dive on what ETFs are and how to buy them. Further, we're going to look at all 4 of them and deep dive. Then from there, we're going to see what the balance would be if you invested consistently in this funds for a 5-year and 10-year span. So please take a moment to like, subscribe, and share with your friends and family. Help the channel grow. Sit back, relax, and enjoy today's ETF review. Now let's jump into this WisdomTree ETF review. As we do with all of our ETF reviews, we're going to do a quick recap of what an exchange-traded fund is and how do we buy ETFs or exchange-traded funds. But a quick highlight here, what WisdomTree ETFs we're going to look at. First up, we're going to look at the high dividend ETF of WisdomTree. The next one is the AI Enhanced Value ETF, and then the small cap dividend ETF, and then finally the Europe Hedged Equity ETF from WisdomTree Group. As a quick recap, what is an exchange traded fund or an ETF? Put it simply, is a basket or a group of investment securities, usually stocks or bonds, and then that trade on the stock market, which makes the ETF share price change all day, just like a stock. ETFs tend to be have additional efficiencies that make their expense ratios lower and have fewer brokerage commission fees. And this helps you, the consumer, or your fund that you're working with, helps you keep the expenses low for your portfolio. Jumping into it, how do we buy an ETF? Well, it comes down to roughly a quick 4-step process. First, you determine the type of account you're going to buy ETF in. Usually that's either an IRA or a brokerage account. Why an IRA or a brokerage account? Because traditionally 401ks don't have ETFs in them. Hoping that will change over time. IRAs is an investment retirement account, an individual retirement account that is, sorry. And then next is a brokerage account. That's just a general taxable account. Then from there, once you've decided which account you're going to go to, you move on to step 2. Who are you going to open that account with? Which firm you're going to open that with? Then number 3, decide on the frequency in which you're going to invest. Is that going to be weekly, monthly, or even bi-weekly? We usually tell people try to go with the same frequency in which you get paid. But if your budget can't handle it, perfectly fine. Go monthly. Just invest consistently. Get yourself in the position to invest consistently. Once you have the consistent dollar amount, do step 4. Make that dollar amount transfer automatically into your account and then do automatic purchases. This will help you dollar cost average over the course of time. For each ETF, we're going to take a quick look at what the ETF category is, the fund benchmark, fund summary, expense recap, top holdings, and finally, fund performance. All right, first up, we have the WisdomTree High Dividend ETF. This one falls into the ETF category of large value. Fund summary, hey, this one's tracking against the high dividend yield companies in the U.S. equity markets, leading us to have an expense ratio of 0.38, so which means for every $10,000 you have invested, it would be expenses of $38 annually. All right, top holdings include companies like AbbVie, Exxon, Chevron, Alteria Group, International IBM, International Business Machines, Philip Morris, Morgan Stanley, Citigroup, Bristol Myers Squibb, United Postal Services, and that is your top holdings. And then look at those sector breakdown. Love it. Financials 24.8, energy 18.29, utilities 13.64, consumer staples 12.6, and finally healthcare rounding out the large numbers above 10% at 10.24. How many holdings do you get with this one? 380. 380 companies helping this ETF perform well, we hope. Let's jump into the performance. All right. Our 1-year performance, 9.86. 3-year, 8.36. 5-year, 7.76. 10-year, 8.19. And since inception, 7.06. But I want to call out something here. Because this one is a high yield dividend fund, you're going to have dividends that help you reinvest, and grow your account even more annually. Moving on to the next fund, we have an AI Enhanced Value Fund. This is a mid-cap value play. This one is tracking against what they call the WisdomTree US AI Enhanced Value Index. And so what they've done here is they've actually created their own custom index, and that's what they're tracking against. And so the expense ratio is 0.38. And so for every $10,000 you have invested, you would get expenses annually of $38. Let's take a look at those holdings. We would have holdings of 101 different companies. Companies like ExxonMobil, International Exchange Group, Otis Worldwide, Fort Trive Corp, Comcast Corp, Bank of America, NASDAQ, PPL Corp. Let's look at that sector breakdown. Financials, 21.42, industrials, 19.28, healthcare, 13.67, and that rounds out our 10%. So a little quick math here. That's roughly 53% in those big major ones. The rest of them, you've got companies under 10%, energy, information technology, consumer staples, utilities, 6.41 right there, materials, consumer communication services, and finally real estate. All right, now let's take a quick look at those returns. 1 year, 13.93, 3 year, 5.31, 5 year, 6.68, 10 year, 7.12, since inception, 7.65. This would be the returns for this one. Now let's move on to our next one. All right, first up, we've got the small cap dividend ETF. This one ETF category is small value. This one's tracking against small cap dividend paying companies and has expense ratios of, yet again, 0.38, which leads to annual cost of $38 for every 10,000. Moving into those holdings, the holdings would have been top 601 companies here in the holdings, leading to a very thin rating, right? Like that many companies, you're going to have very thin. Big companies in there, CRV Energy, Kohl's, TFS Financial, EPR Properties, MDC Holdings, Xerox Holdings, Carter's, and Arc Rock. And then from there, Arch Rock. And then from there, let's look at that sector breakdown. Sector breakdown, financials, 24.63. Consumer discretionaries, 14.9, so roughly 15. Industrials at 14.8, again, rounded up 15. And finally, the closest one you got to 10% from there is real estate. Other ones in there, other sectors, energy, utilities, materials, and finally, consumer staples. All right, let's take a look at that performance. 1 year, 17.79. 3 year, 4.61. 5 year, 6.52. 10 year, 6.74. And since inception, 7.3. Not bad. Some nice returns. All right, jumping into our final one. This one is the wild card for our group. This is a European hedge equity play. This one is ETF category, European stocks. This ETF is, again, tracking against the WisdomTree Europe Hedge Equity Index. So again, this is a custom index that WisdomTree has derived for themselves. And now look at the expenses, 0.58. The only one that's different, 0.58. So for every $10,000 invested, you would have about $58 annually in expenses. All right, 164 different companies are here. 164. So a quick recap on some of the ones that I can say their names without sounding crazy. ASML Holdings, Siemens, Mercedes-Benz, Hennessy Lewis, Deutsche Telekom, Banco Corp, and L'Oreal SA. Let's take a look at those sector breakdown. This one I can handle. Sector breakdown. Consumer discretionaries, 26.65. Industrials, 18.74. Financials, 15.38. And then consumer staples, 12.35. Ones that are below 10% but make the list, information technology, healthcare, communication services, materials, energy, and finally utilities. Now let's jump into the returns for this one. What do we have for returns? Awesome. We've got a 1 year, 21.63, 3 year, 12.98, 11.49 for that 5 year, and 9.3 for the 10 year. That is pretty nice. That is for the international play. I think this might be kind of high from what I usually see, but not bad. Let's take the returns. Let's enjoy it. This is going to help our portfolios and overall. And again, we're going to round out this ETF review with, if we invested in all four funds consistently for 5 years and even 10 years, what would the balance be? Coming up next. All right, now jumping into it, we're going to take an example of someone investing into a Roth or a traditional IRA. They're going to max that out. They're going to do $7,000 per year. That's the current limit. 4 funds. The first ones are large cap, 1 year of 9.68, 5 year 7.716, 10-year 8.19. Our mid-cap, this one is your enhanced AI value fund. This is our mid-cap, 13.93 for the 1 year, 5-year 6.68, 10-year 7.12. Next up, our WisdomTree small cap dividend. It's a 17.79 for the 1 year, 5-year 6.52, 10-year 6.74. And then finally, we move on to our European hedge. This one had a 1 year of 21.63, 5-year 11.49, and then finally 9.30 as your 10-year. All right, so let's take a look and see what that balance would be after 5 years. 5 years, 44,000, 44,500 rounded. All right, our principal would have been about 35,000, or 79% of the total balance, and then the rest would have been growth. That would have been 9.5 thousand, so 9,500, 21% of the balance. Let's see what this jumps to. Will we break 100 in the 10-year? Yes, we pulled it off. All right, 108. So 10 years, principal would have been 70,000. And then, so again, 10 years of 7,000 a year. And then our growth would have been 38.69. All right, so again, $38,697. Now, I want to call out again, WisdomTree does a lot of dividend work, which is a little harder to factor for when we do these projections. So the balance actually would have been higher. So again, I hope you enjoyed this ETF review. We'll see you in the next one and talk to you soon. Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please take a moment to hit that like button, drop a comment, subscribe, share with your friends and family. This will help the channel reach out to more individuals just like you. We offer one-on-one coaching where we work with people and small businesses to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. So please see our link below to schedule a free 30-minute call with our team to talk through coaching and understanding your current financial situation. Also, check out some of our affiliate links below for high yield savings account. This is a great place to put your money when you're saving up for those big purchases and your emergency fund. Check out some of our videos right here. And please enjoy and see you in the next video.